All right, so there's certainly an ongoing debate about the health of the consumer. You've got two gauges that recently have seen a pretty big falls, right? So back in April, consumer confidence drops to a 21-month low due to concerns about food and gas prices. Then, of course, there was the consumer sentiment that tumbled just here about a week ago. But proprietary research from my next guest says that consumer sentiment has actually been edging higher. I'm going to bring in now LSEG Director of Consumer Research, Jharonne Martis. And Jharonne, so obviously, I'm intrigued with your data vis-a-vis the headlines that we started this segment off with.
Yeah, so the LSEG consumer confidence is based on the fact that consumers are currently employed, and that's actually what's fueling the economy. This first quarter, retailers are already reporting earnings, and what we're seeing is that the consumer is starting to spend a little bit more on general merchandise, and they're doing that in a time when the overall amount of merchandise on sale is actually the lowest we've seen in 4 years, and so is the average percentage discount. So this is telling us that despite the lower markdowns, we're seeing a shift in consumer spending again towards general merchandise.
Shift from where, though?
Remember the YOLO? We're still seeing that restaurants and hotels are still strong, but they are coming down a little bit compared to the strong numbers that we've seen the previous years. It's still healthy, though.
So,
still double-digit growth.
And to that point, because I was looking at Bank of America, their credit card data, and they do the day-to-day stuff. So the last day was the 11th. Entertainment was down 10.5%. Airlines were down over 3%. That was the core of YOLO. So, I mean, if people are saying, okay, I'm not going to travel, I'll just buy a pair of jeans, is that good or bad in terms of the true strength of the economy, the consumer?
Oh, right. So for the first quarter, we saw U.S. retail sales post a very healthy number. April was flat, but despite the fact that they were flat, clothing was up.
Clothing was up.
Clothing was up. And the thing about the retail sales number is the Easter effect. So you always have to look at both months because Easter came in much earlier than last year. You do that, and you still have a 0.3 average, which is in line with what we saw the first quarter. So consumers are still spending. They're just shifting their spending.
But they're also spending. They're spending on things like the biggest thing in retail sales is a 3.1 jump in gasoline stations. So if you're spending all your money on gasoline and food, you really don't have a lot left. But something that caught my eye there, I do want to ask you about.
Yes.
Department stores were up.
Yes.
And the internet was down. Same thing with that Bank of America data. The department store spending was up, internet down.
Yes.
When did we start switching the department stores for internet? I root for the department stores over the internet.
Internet was up year over year, though. It was down month over month because we saw stronger sales in March. So remember, March stole a lot of that April number. So you have to look at it also year over year. But having said that, yes, the department stores, Dillard's reported yesterday they have a very good mix. We're expected to hear from Macy's also a little bit of a turnaround. But clothing really stole, the show. Clothing up 1.5.
Someone had a theory that because everyone's on Ozempic, they look good, they want to go out and let people see them.
That's a possibility, yes.
Okay.
But in general, what we see is that when Easter comes around, people want a fresh new wardrobe, and that really played very strong in 2024.
So the consumer sentiment, the Michigan gauge, has a high correlation with inflation expectations, right? So sentiment goes down as expectations for inflation goes up. We know expectations are starting to rocket again for consumers. In your report, you say 143 retailers reported and 84 mentioned inflation.
Yes.
I'm curious as to how the stocks reacted for those names that mentioned inflation. Did they fare better or worse than the general market?
So let's talk about the two retailers, for example, this week. Home Depot, they said that they suffered because of higher inflation, higher mortgage rates, and that's affecting to an extent the other home retail names like Lovesac, Havertys Furnitures. They're all expected to be in the bottom 10 when it comes to same-store sales this quarter. On the flip side, when the inflation peaked during the pandemic, right? Since 2019, Walmart saw an increase of $130 billion because of the inflation. So you're seeing that inflation, yes. Again, that shift in consumer spending.
Everyone's
away from the big ticket items and going towards the bargains. So that's the play that we're seeing here with the retail space.
And it helps that they have groceries too. Hey, I got to go, but I want to share the names of the audience that you do like right now.
Yes.
Abercrombie.
Abercrombie, it's on its track to post four consecutive quarters of double-digit comps.
Lulu and American Eagle.
Yes, and Urban Outfitters, and watch out for the Gap. Analysts polled by LSEG believe that retailer will beat expectations and post a positive surprise this season. Yes.
All right, you know what? You have an amazing track record of retail. I never doubt you. Thanks a lot, Jharonne.
Thank you
Appreciate
for having me.